Hey, it's Mack with PriceActionTradingSystem.com, and it's Thursday. It's May the 7th. This will be our chart lesson for today. And once again, the I used the 6,000 volume chart today. Looks really, really good. Um, Also looked at the 5 and the 7. The 5 doesn't look too bad either, but I tend to like the 6,000. We'll just compare the 5,000. I hadn't looked at it in the last little bit, but you can see there's your 5,000 tick chart. Just a lot of bars, but it doesn't look a whole lot different than the 6,000. Again, there's a 6,000, 5,000, and then there's a 7. And it doesn't look really bad. I mean, it looks pretty good too. But I think any of these are tradable. But I'm leaning towards the 6,000 one right now. It seems to have plenty of setups. I mean, look at the trades today. This looks a whole lot like a range. And in the end, I think there's a bigger two-tiered channel here. But what I was looking at was this move up right here, and then we just kind of went into a range, and then we started a new move up. And notice it's like a little spiking channel, so you can see you could have played the shorter term one if you wanted, but I think having the I think having that seeing that spiking channel helped you with these trades right here, uh, keeping you on the right side. But the bigger two tier didn't really help you that much, to be honest with you. So I'm going to move it out of the way. I don't think we need it. I think you can see better what we need. And there's actually a midline in here, and you can see that right through there. But the market was fairly strong today. I had a target of 2090, and we didn't quite get there. We came really close. And the way I got that target was I just simply drew. You find your first leg up, and then you move that over, and you can see that gives you actually about 2090, a little over 2090. We didn't quite get there, but a lot of times I will also just measure the first real move up, which was right here, and then move that over and shoot for that one. Let that one be your first target. And see, we still didn't quite get to that one either. Notice how we sold off pretty much the rest of the day. I really can consider this a uptrend until we turn down right here. And it's more of a range after that, to be honest with you. So that's what I was looking at today, the move up, the range, and then the second leg up. And generally, that's what will happen. If you trade up into a range, when you break out, you'll probably be successful to the same direction that you traded up into it or traded down into it. If we'd have traded down into this range, you'd have been expecting the breakout to most likely the bias would be to break out to the downside. Doesn't mean it'll always happen, but that's the bias, and that's what will happen most of the time. So, um, but let's talk about the trades, and I'm gonna wrap this up. I want to get out of here a little early today, so. But let me just back out. You can see there's a leg up, a little correction, and another leg up, and that's basically what we had. So I'll back out a little bit so you can see a little better. But the first trade I saw, this is basically a double top. This is where you're going to find resistance. This was the overnight high and the low at that point. And the reason I like this trade, it's just, I mean, it's basically a double top, but that's a very strong move, and it's way away from the EMA. And look at that bearish reversal bar. And that's why I liked it, figuring we'd get a chance to pull back. You're better off. I mean, this one really should almost be green. I'm going to change it to green. Um, I like that trade. I was pretty confident in it, but thinking about it, it probably should be green because it's a first entry counting off the top. It's about a about a third entry counting off the high. But when you move that far and you hit a strong resistance, especially like an overnight high or low, and you get a reversal bar like that, it's hard to ignore that setup there, especially that far away from the EMA and the fact that it's been away from it for that long, because it just doesn't stay away very long. It's like a magnet. It pulls, and then when it touches, it's like it repels, and it pulls and repels, and that's what the way we treat it. So then we work down, we move back up, and this is really like a double test. You could almost take this one too, but at this point, you don't know that it won't break through and give you another leg up like that first leg. So I was a little bit leery of it, and I just think I think you got to wait on this one. It's not a bad signal bar, but it's not a great one. It's kind of a doji, but it turned out to be a great trade. But and really, this is a second entry short too. So there's reasons that you could justify being aggressive and taking that. But I'm gonna tell you, I wouldn't take it. It's we've already come back to the EMA. We don't know that we don't get another strong leg up. So I just think it's a little risky. I think you're better to wait. But if you want to be aggressive, maybe. But then we bounce down here. We get a first entry short, pull back. We get a second entry short. It fails, and it's right where you kind of expect the trend line to be, right up through there. And so that's a failed second entry short. It bounced right off the trend line, and it takes off. Nice setup. All three of these were nice setups, really. Got a good move out of it, I guess I should say. They're not; these two aren't necessarily great setups, but there's reasons to take them. But then you make a new high, you pull back, and you pull back again, you get another double top. And this time you get a nice reversal bar, and so I like that one again. It's another great move down, and it was tempting to go. It actually broke higher and turned and went down, so it was tempting to go short right there. You probably could have, um, but if this channel is valid, we didn't have a break of it yet, or this was the first break and we didn't have a new high, so I was a little bit leery of it. Um, and then we bounced. Where did we bounce? We kind of bounced right along that same place there. So I drew my support line there, and when it touched down and failed and went higher again. But notice the break and the new low, and we're holding right along that support. So I like that for a long. It's looking rangy now, which it is a range now, and then it works its way up. And this is a good example. I talked about this yesterday, but sometimes on these shorter term trend lines or trend channels, you don't necessarily get the rules don't play out. It did end up playing out here. You got your break, and then it had to really fight and got that tick by one, new tick by one high, and then it turns down. Now, that's why you can't go long up there, because that's what was going on. And a lot of times it can't get through there, and it just gives up, and you don't get a retest. You might get a retest attempt, but you may not necessarily get a new high. We end up getting it here, and then it sells off and goes right to the other side again. But I like this entry because it's a failed break higher. It's a double top with a lower high. And I like that little bitty bar, little bearish bar. And you can get in really, really cheap on this. Very, very small stop. It's basically only 3 ticks. So I like those kind occasionally. And it's a second entry short as well. You notice the new low, pull back first entry, pull back second entry. So I like that one. You're a good bit away from the EMA. Even if it's going to go higher, it'll probably pull back to that EMA. And so I liked it. And turned out to be a nice scalp. Didn't get anything more. And this just got kind of rangy, to be honest. But, once it broke higher and got that new high there, this was the first break. This is like a two-legged move up. There's one leg up, a little two-legged correction, then another leg up, and it makes its new high and it sells off. But I like that big bearish bar. Um, and it was kind of tempting to go short right here, but I just didn't like this one. Um, there's too much overlap there. I felt like we needed to trap. You needed to make a little break higher like it did here. It got one tick higher than that double top, and then it turned down instantly and went the other way. And so I liked it for that reason. I went back and forth. This one is close to being green because of all the overlap. But this is just a smaller little channel or trading range. And we traded down into this one. And so I figured you're going to trade down. And then you got the bigger range. And that's prices were really struggling to get through that level. And once it goes lower, where does it bounce? Exactly where you're expecting it to again. And notice your little channel, your break, you move to a new low, bounces right off the low in a big reversal bar. You might have used a limit order here, but I'm going to tell you, there's plenty of room to get out here. A lot of times when you use a limit order on one like this, you get left behind. Not in this case, it would have backed up quite a bit. So you could have gotten filled all the way 3 or 4 ticks back into that bar. But generally, I just enter these with a stop. And if I do use a limit order, I don't get real conservative. I'll put it right at the top or maybe a tick in at 2 at the most, and off it goes. And that's the trade of the day, really, because this thing takes off and it never looks back, and any runners would have been safe. So and this is a spike in a channel. And there's actually a failed second entry short right there, uh, but I didn't really like it because it's right there into that resistance, and you're finding resistance, and so you've got to go long right into that upper resistance in order to you can see that to go long right there. And so I didn't like that one. But then you start working back, and this is just another trading range. You get that little failed break lower, and it reverses. I didn't like going long there, but once you got this bar, um, let it break higher and then drop you a limit order in there, a tick or two back in it, and see if you can get filled. And you would have, and this thing takes off. So great trade. And again, any runners would have been safe here. And then you get a two-legged correction back to the EMA / trend line. These are the setups we love in a trending market. Just go long, right? And this one actually went lower first and then broke out the top. You could go long there, or you could wait on that one. Didn't matter. And then guess what? You get another two-legged back. We did go through the EMA, but that's the first break of that channel. And, this has been a strong market, so you're probably going to get a retest attempt. And again, it broke lower and then went up. It didn't quite get out the upper side, but that's a bullish bar. Just go long right there. Then it pulls back and it does the same thing. It breaks lower first and then goes out the top. So now this one was a second entry counting off, working down, counting off the highs. Here's your new high pullback, first entry pull. There's actually a little break there, but that's like one leg and then a pullback and then your second leg. So this looks close enough to be good enough, even though there was a little break higher. I still consider this a second entry long. And then you pull back and you get a second entry long off the lows. Again, this is definitely not a very good signal bar. When it broke higher, I definitely would have considered a limit order, a couple of ticks, tick or so back in. You could have used a stop and it still would have worked, but you don't know that ahead of time, so be a little conservative with them. And then it pulls back, 2 legs back, and you get another chance. And again, it's similar to this setup. You could use a limit order. If I remember right, though, I don't think this one backed up, but maybe you might have gotten filled right at the high. I don't think you'd have got filled to tick back in. Didn't matter. Even a stop would have got filled, and then it sells off. Tried it multiple times. They can't go higher, so it just kind of gives up. And that's what prices do. They work for high. they work into resistance, and if they can't get through, they work to support until it holds, and then it works higher until, and eventually it'll break one way. And when you can't get through either way, you end up with a range like this right here. You get stuck. You can't get through the highs, you can't get through the lows, but eventually it'll work its way on through one way or the other, and it starts moving again. And that's fairly standard. That's MO for, and that's what we do, and that's what prices do. And so make sure you understand that. It's very important. But I like the 6,000 tick chart. I think it looks really good. I'm kind of sold on it at this point. I'm going to continue to watch the others. I'm not even going to go back to the tick charts. I like these better at this point. If something changes, maybe we change it back to the tick charts at some point. If you're on one of the other data feeds and you don't want to leave and everything's working still properly, don't worry about it. Stay with the tick charts, the 2000 tick chart. But for now, if you're using CQG, you can either use one. I'd say either use somewhere between a 6 and 800 tick chart, or go with this volume. And if you use volume, we're using about a 6,000 volume, and it's real close. I mean, looking at this, I can't tell the difference from what our 2,000 tick chart looked like. It may change again. I'm reserving the right to say I'm changing again. That's the way trading is. You know, nothing's ever written in stone. But for now, we're trading, if you're on CQG and you want, we're trading 6,000 volume chart. And we'll stick with that for a while. But I'm really liking it so far. I can't tell it from the 2,000 tick chart today. I mean, it felt real comfortable. And somebody else asked me that, I don't feel comfortable yet. Should I trade live or should I go back to sim? And I always tell people, if you're not comfortable, so much of what we do here is mental. You got to have a good strategy and you got to be able to read the chart, but you still have to have that mental edge. And if you're not comfortable or you're doubting yourself, then you're going to make mistakes. So anytime you're not comfortable, don't trade live. So if you're not comfortable with the chart you're looking at, do not trade live. Wait till you feel comfortable enough, or you're, and trade. Now I'm gonna tell you, there's nothing wrong with the tick data that's coming through on CQG. It's just in a different format. It comes differently. So, um, and the whole reason for using the tick charts is not as valid. I'm not gonna say it's invalid because it still shows you a lot more details than the time-based charts, but it doesn't show you as good of details as it did previously. And so by going to the volume, I think we're much closer to seeing the details of what's going on. And that's what we do. We we don't know exactly what the big guys are going to do. They're the guys that move the market. We never know exactly what they're going to do, but they can't hide their footprints. The footprints are here, and we can read those footprints and determine what they're doing. Just like somebody's experience can track game or whatever. You can tell by the footprints what's going on, what they're thinking, and what they're doing. And if you're good enough at it, you follow the footprints and you have a good idea of what's going on. And so they can't hide their footprints. They might can change the data. I'm still not convinced that's exactly why it was changed, but you never know. It doesn't matter. They changed it, and there's nothing we can do about it. So you can sit around and sulk over it, or you can try to, find you a new way to, you can improve and find a new way to do what we used to do. And that's all we're doing. Now we found a new way. I think the 6,000 tick chart is about, I can't see much difference at all between the 2,000 tick chart. So I think we're back and we figured out their game and we're playing their game again. And trust me, it's a game. And their point is to try to fool you and trick you into entering the wrong way. And they use strategies to, just like here when everything was down here, they break it higher knowing that everybody likes to buy them, and they reverse it the other way, and then everybody likes to sell it down here when it breaks lower, and they trap you a couple of different ways and chop you up, and then they run it out a different way. And so, that's why we have our rules in place that tell us how to handle that. And if you follow the rules, you're going to do a whole lot better. So, not much more I can say about today. Really good day, lots of trades. You had to kind of wait into the regular open to get a really good one. But these were two pretty good trades. This big move all happened too early. Um, so we couldn't catch that one. At least I couldn't. If you were trading earlier, you might have caught that one. Notice down here, there's a new low. Pullback first entry, pullback second entry. That's a great failed second entry short. Chance to get long with a kind of a bullish reversal bar. Look at that thing go. So, generally you can start trading the ES usually from around 6 o'clock is kind of what I say, 6 o'clock a.m. on. I don't like to get started that early. I'm usually taking my daughter to school or something, so I don't get in here till around 7 o'clock. Um, I don't want to start too early, but if I could, once I get my daughter out of school and I don't take her to school anymore, I may start coming in earlier. But for now, I get here about 7 o'clock and 7:15, and I get started every day. So um, anyway, you can see that even overnight, that was a pretty good move. But it starts moving around 6:30, and there's plenty of volume, so you can feel free to trade it from that point. But you can see over there overnight, not much happening. Who wants to sit here and wait on that all night? Not me, anyway. But if that's the only time you can trade, then you got to do what you got to do. But I'm not crazy about it. It's just not enough volume and stuff, and you get slippage and everything else trading after hours when there's not any volume. So, but from about 6 a.m., and that's Central Standard Time for anyone that's curious about what time I'm talking about. Um, so I'm going to wrap it up. We'll be back again to do it tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.